Mm.
I don't. I don't know how to go to chat from here. Fuck it. I'll
Oh,
send it right after
down
this.
the bottom, it'll highlight and just press chat.
I don't see chat on my screen at all. I think it's just on your screen. Oh, here it is. All right. What?
What?
Why you? Anyway. All right. So basically, there's a thing known as leveraged ETFs. That's why I've been talking about the T triple Q. But what I've been trying to do was trying to mitigate losses that you would have if you have a triple leverage ETF. You have triple the exposure to the upside as well as the downside. So one of the things I was trying to do was trying to find a portfolio that would prevent that from happening. So I'm starting off with $100,000. You could put whatever amount here, and just contributing $500 monthly. So this is the portfolio. I based it off of the one that I'm currently working with.
$100,000 to invest?
Huh?
You got $100,000 to invest?
I have more than that, but I just don't want to show it out here. Bro, I'm telling you, dog, you should have got in on that ADA, my boy. In any
I did
case,
88.
I'm talking about when it was 2.5 cents, man.
Oh,
Yeah.
no, I did.
Hey, bro, like, just relax, bro.
I did get it when it was 2.5%. I just didn't buy as much as you did because I still got mine. I didn't remember because I was like, I think when ADA really started getting popping, like I was buying as much as you because at one point I had more than you, but then you're a competitive fuck, so you wouldn't kept buying and kept buying it, but kept buying, and you've been buying this entire time. What
Yep.
I did was completely stop buying crypto. I just wasn't focused on it at all. If I did what you did and kept buying it, because I pretty much thought it was dead. It was a fad. It made a little couple bucks, and it was done. I figured the government fucked it over, so there's nothing that was gonna come of it. The last really stand I saw was PD3, which I should have bought into that, but I don't know why I didn't send you the money. I still don't know why the fuck I didn't just
Bro,
cash out.
I could have sworn I called you like 10 times about that shit, bro. But
You called me like 10 times. I just don't understand. Like, I'm really trying to figure out why the fuck did I just not send you $200? Like with
once
the
you,
88 thing, I just
yeah,
stopped buying.
yeah. I mean, that's beside the point. I mean, I've been saving up money since undergrad, so I'm actually behind where I'm supposed to be with in terms of my stock portfolio.
Let's
But
be honest. If I would have bought the PD3, we all be
yeah,
millionaires by now. But that's besides the point.
all right, let me get on with the strategy, bro. Like the monetary amount doesn't matter. It's the returns. I was just showing this as an example. You can put this down to, matter of fact, just for the sake of this, we'll put it down to $10,000, $300 a month, bro. And every year you're rebalancing it, so you're getting your ratios back to these particular values.
Mm.
So the triple leverage equity that I'm referring to, or the ETF, is T triple Q. I have these three portfolios over here. I found that this gave the best returns and the best risk adjustment, so that's kind of what I'm going to be showing. And I'm comparing this all to if you were just investing in the S&P 500, which is VOO or SPY, what have you. Any case, we just hit analyze portfolios over yonder. We're gonna let the page load. So these are the allocations. Once again, it's being rebalanced on a yearly basis. So every January 1st, you're just going in and rebalancing it, taking that small tax hit. Um, but what this shows is, once again, we started off with $10,000, $300 a month. This is a back test. So this is showing the last 10 years between 2011, 2021. But if you would have started in 2011 with $10,000, $300 a month, this will be your final balance over yonder. Compound annual growth rate is ridiculous. Once again, it's the 3x leverage. So that's why you're seeing such large compound annual growth. That's why you're seeing such large drawdowns. And that's why you're seeing that you have a worse year than what you would do in the S&P 500. But if you were to go 100% in the T triple Q, you're low key fucking yourself kind of hard, because on your drawdowns it's just going to be terrible. However, the amount that you would have made, you know what I'm saying, if you would have started back in 2011, would have been orders of magnitude higher, or twice as high, more or less. So that's basically what it is. You know what I'm saying?
Hey, so for him, right? So for your hedge harder, right?
You said that you put in 10,000 and you got 1.4 back, and that's
Yep.
100% in TQQQ, right?
Yep.
What is TTQQ actual? What is it tracking? Let me pull it up real quick.
It's the it's QQQ triple leveraged.
Okay. Oh, that's why the returns are ignorant. It's triple leveraged.
Yeah, and that's why also your drawdowns are ignorant. This is a drawdown of almost half your portfolio, and
I mean,
in the
so the thing is, I mean, I get the drawdown aspect, but for me, drawdown is always going to happen in a portfolio, right?
yeah, no, I agree.
I mean, this one you're just seeing triple the drawdown, so it's a little bit more dramatic. But drawdown
Yeah.
is always going to happen in a portfolio. But that's
Yeah.
why you don't look at a fixed period of time. You're looking at the normalized return over a certain period, which is
Yep.
here.
See, I agree with that, but the person I'm working with, he's just doing dollar cost averaging. What I'm going to be doing on those large drawdowns are selling cash secured puts, as well as on the upswings, I'm going to be selling covered calls. So I'm going to be making equity on both sides of the spectrum. So that will mitigate all of the losses that I'm making. But he's not going to be doing those advanced strategies. So I'm trying to make it stomachable for the average person. Like if you were to wake up like in 2020 and saw your portfolio had gone down 30% in 2 weeks, you would feel sick to your stomach.
Yes.
So that's why I'm trying to make it for him. So there's some type of risk adjustment applied to it.
Versus,
Me, I'm going 100% in it. Fuck what you talk about, bro. I'm going hard, bro. So it is what it is.
But I mean, you're using play money, right? Or your actual, this is like your main portfolio.
So this is my brokerage account. I have a IRA as well as well, I have a Roth and a traditional IRA that I'm only putting in S&P 500 and some bond fund in a 70-30 split.
Well, okay. Well, mine's right now is 93.7 S&P.
So when will you be a millionaire? I'm guessing in the next 5 to 6 years.
If there's a strong if the returns are the same as they were for the past 10 years and the 10 years forward looking, I should be a millionaire if, once again, this is 100% T-triple Q. If I went balls to the wall, which is what I'm doing at the moment, it's looking like it would have only took 4 years for me to get there, kind of, sort of.
Starting out with your initial investment of 10,000.
That's why. Okay, now I remember why I didn't.
Yep.
I didn't invest in all that shit because I fucked up my back. Remember that was when I originally fucked up my back, so I just kind of stopped doing all that shit because I was really focused on my back and seeing how bad it was.
No, I got you, but I mean, you weren't here when I showed. Even if you just start off with $1,000 with $300 a month, you would be a millionaire in 10 years if, once again, it repeats the same thing that happened in the past.
This shit is recording, and I'm gonna save it to my computer, and I'm gonna save it on a hard drive to watch it later. Like, I was gonna ask your permission if I could post it on the word of mouth page.
Yeah, do what you do, bro. It doesn't matter to me. And also on this website, they also have forward-looking Monte Carlo simulations, so you can look at different scenarios. You can constrain your drawdowns. You could say whatever, like have a standard deviation in your drawdowns and things of that nature. And I did forward-looking, like if I just go to tickers once again, bro, it's something slight, bro, something slight. You can even look at your withdrawal amount, your contribution amount, things of that nature. So
you just sit on this money in TQQQ.
What I'm going to do is, after I get to an amount that I'm comfortable with after taxes, I'm going to invest it in one of these dividend portfolios so that my income on a yearly basis will be 6 figures. So this is at 4% yield.
Like when we were down there, we first started learning and stuff, and it was like to have enough investments where it generates 6 figures in dividends, that it pays bills and all the other stuff. But see, we were on the track with the crypto and all the other stuff. Fahim stayed on track. I fucked up my back, and that kind of derailed me from doing everything else because I could no longer do the military. So I had to get my VA stuff together. But now that I've got my VA stuff together officially, and they're actually doing a percentage boost with me moving, I'll be by myself. So the only thing I'm going to be doing is drawing school and pretty much getting back on the investment thing and working on the brand.
Gotcha. So Fahim, right? So QQQ as like 360 something, and TQQQ is 130.
What 130? Yeah. Mm-hmm.
So are you trading options on these, or just this is just you buying and holding?
So if you were to look at my portfolio, I have like 150 QQQ and I got like 300 and something T triple Q. When you have at least 100 of the share, you're able to sell options on it, right? So I can sell calls against my position. And because I'm in Fidelity, they give me margin on my account. So I have like $70,000 worth of margin that I can use to buy cash secured puts. So when you have those extremely large drawdowns, you increase the implied volatility within those particular options. So the amount of premium that you make in selling those cash secured puts is disgusting. Like for instance, the other day I made like $500 selling a cash secured put that was expiring on Friday, and I just used that money to buy more T triple Q when it went from 110 down to 80 something.
Gotcha.
Yeah, because it's triple leverage, it moves a lot more, right? The delta's a lot higher, the theta's a lot higher.
With this app, is it gonna buy and sell the app, the dividends, the options for you, or do you still have to do that yourself?
I'm using Fidelity, so you have to do all of that yourself.
Okay.
I mean, buying and just holding, you will still make a disgusting amount of money if, once again, the caveat that QQQ has the same 10-year period going forward. They also have this on the S&P 500 as well as the Dow Industrial Average as well as the Russell 2000. So you can pick any of those different things and just get the triple leverage version.
So the format I've been using, the format I've been using is kind of investing like at least in this in stock. I invest $200 a month, and then like after investing the $200 a month, I just put it in TQQ, whatever I was putting in it, and then like I would put the limit holds up and make my money back off of that. Well, the limit, stop limits and orders and all that other stuff and put it up. And then when I saw that it was a trend that it was continuously growing, I would buy an option and then flip the money off of that and then I kept the process going. Like, but if I didn't see like a consistent trend where money was going, like it was on a trend to go up, I wouldn't buy anything. I would just hold in my my space. Like I did that for like 2 to 3 months, and I think I made like $2-3 grand off of it in total.
Yeah,
I mean that long. It didn't take much to do it.
Yeah, I mean basically what you're doing is momentum investing at the end of the day.
But I think my own is more efficient. The way you're doing it is because you have an algorithm behind it. Mine is more so, I guess, because TQQ could go up and I could be on the trend where it was going up, but it was very likelihood that the day I bought it, the next day it could just completely plummet in the option.
So Fahim, basically because you're triple leveraging over 10 years, you're basically seeing a triple return. So from the standpoint of you're seeing returns that you would potentially see in 30 years in a 10-year period.
Yes. There's a little bit of slippage, but yeah, it's like 2.75 if you look at the math. But that's still disgusting.
Yeah, but you're under the presumption that basically past performance is an indication of previous performance.
Well, the thing is, these ETFs like S&P 500 and QQQ, they're designed to only go up, right? If you have an underperforming asset within the basket of stocks that they have, that asset is taken out of that 100 and they put in an overperforming asset, right? So there's stocks that all the time coming out of the index and more stocks that are growing coming into the index. So over time, it's designed to go up.
You just got to stomach the drawdown when it happens.
Yeah, like the S&P 500, over the last 100 years, there's been like 20 something drawdowns. However, it's always recovered.
I mean, the average bear market, only lasts 14 months or something like that?
Yeah.
The longest bear market?
Yeah, something like that. What I'm getting at is in those bear markets, you can do a lot of strategies that can reduce your risk as well as you can load up in these regimes. Like if you would have bought nothing but T triple Q in March of last year, it was $30. It went up to 250. It did a split, 2-for-1 split. So you would have made 8.7 times your gains if you would have got in March.
Got you. How did you find out about this?
Uh, yeah.
What
Fine.
you said?
Like,
You said
he was like a master researcher. Like that's his thing. Like research is his thing.
Yeah, all I do is read all day, bro.
Like his researching, like, because I didn't really have time to do the research he did. Like we both started out, but it was like I was doing the business stuff and he was doing that. I split off to do the business stuff and got it as far as I could get it, but he did the financial part because we figured out very quickly like money was needed to do a lot of this shit, and a lot of the money I've made I've invested into that. Since we really started doing this in 2016, 2017, I didn't put at least 20 to 50,000 in this just because of investments.
Got you. So Ben, can you run a scenario? What happened if you just put the 10,000 into TQQQ and you just let it sit for 10 years with no additional contributions, no rebalancing, you just let it sit. Just the 10,000, you're not anything.
In the last 10 years, it's split 3 times, but that doesn't really matter. The equity of the position is what matters. So if you were to just put in 10,000, it would be at 866,000 for the past 10 years.
All right.
Do you understand how disgusting that is, bro?
I am. I'm just trying to see something.
That means you could have had a McDonald's salary and you would have been able to retire. Literally.
Well, as long as
if you would have started off with just $10,000, put in no more money, never touched your account again, forgot about it, it would be at 866,000. I'm just saying, bro.
That's just holding it, right?
That's doing absolutely nothing. Losing your password and refinding it.
So how far can you push this out? Like, can you push this out? What does this look like? 20, 30 years? Well,
going
30
forward,
years?
I mean, I could do a Monte Carlo. I mean, it's not going to give something that's real.
Let's go $500. What you're looking at with a poor man? Because everybody ain't got $10,000. Let's what does $500? Hell, what does $200 look like?
$200. All right, just $200 with no contributions.
Yeah, let's just look what it looked like just for the poor man. Humor me.
I'm about to do 15 years pre-tax returns because I don't know what the tax rate is going to be going forward. You know what I'm saying? I'm just I mean, I kind of know off the top of my head it'll be a little bit over 3,000, I believe, if my splits are correct. Let me see here, my brother. So it's using a historical. Okay. Does it matter? Do you care?
What do you mean?
Sequence of risk. So if you have the first 2 years, like if you bought it today and then the next 2 years straight, it was just drilling to the center of the earth. Let's do that. All right. Let's just run a simulation, dude. Let's just see.
We're running scenarios.
Yeah, man. We just fucking around, dude. So yeah. Oh, so this gives you the different percentiles. 50 percentile would be basically average if you look at it from a bell curve perspective. It would have been, that's not real, dog. $89,000 if you start off with $200. Let me make sure.
In 15 years?
No contributions in 15 years. Yeah, it'll be at $89,000.
Okay. I just wanted to see.
How the fuck is that possible?
I mean, for him, I mean, if you scale that to 10,000 with no return, you was at 84.
Yeah, so that makes sense.
I mean, again, you're triple leveraging an asset, so.
I understand what you're saying, bro. But you know goddamn well this looks ridiculous, bro.
I mean, it's the truth, right?
I mean, it's a Monte Carlo simulation at the moment. So it's like using the past 10 years and it's taking the average of those drawdowns and then extrapolating it forward.
I mean, how long has this ticker been around?
Since 2011.
But the QQQ's been around since, well, QQQ is just an index fund, right?
NASDAQ 100, that goes all the way back to the 80s, but the actual QQQ came out like 1999 or 1998.
Okay.
So you can do all of this. All you would need is like R just bring in all of the different QQQ data and just triple all of the daily returns. I've seen people do it. I can probably do it in MATLAB if I felt like it, but I don't see the point.
Got you.
Oh, this is disgusting. Let me see what after tax returns are, dogs. This shit crazy. But I mean, as I said, this is all predicated on the fact that we've been in a bull market. If the next 10 years are trashed here, we might be screwed. That's why I put the little 2 years. Let's see if the worst 5 years. Let's see what that does, bro. But as I said, this is all on the.
But I mean, if your dollar cost averaging it over time, then.
But this is not. I haven't put any money in. This is just 10,000 lump sum.
That's what I'm saying. If say every month you're investing 500, that's 6,000 a year. So even if it's going down, I mean,
let's see.
So let's put 600, 500 worst 5 years and see what that does for you.
We're doing it annually, monthly?
Monthly.
Whoa, this about to be crazy. 15 years. Because I'm trying to retire at 45. Fuck what you talking about. So that's why I'm using these riskier strategies in order to get there.
I mean, if you have the liquid cash,
it was just $200. So, and we're talking no contribution over 10 years is 89,000, which is a pretty decent deal. But if you took that out, if that's 89,000 and you kept it in there, like you took it out and you put it in like half of it in dividends, and then you put the 40,000. We'll put 45, just round it off to 90, and then another 10 years. You pretty much would leverage what you got the first time with the 10 year.
Yeah. Like I mean,
oh, bruh.
Are there any other high?
What are you looking at?
Oh, yeah, there are a lot of them actually.
Because for me, I would just diversify across NASDAQ, S&P, Dow, Russell 2000.
You're right.
And just leverage. Again. This is because like I say, for me, I would use play money for this. So like 500 a month in there and just toss it in there. That'd just be like wasted spending money. But I mean,
no. Oh, here we go. So actually, TQQQ isn't even the one that went up the most. It was SOXL, which is a semiconductor index, I believe, that has gone up the most.
Oh yeah, of course. I mean, semis are.
Yeah, but this is a list of all of them.
Okay.
So they even got the FANG. So if you just want Facebook, Amazon, Netflix, and Google, small cap. This is the Dow. Gold miners. Like, there's a shit ton of them, dude. The fact that nobody has ever taught us about this is criminal.
Yeah, like because like I never heard about it until I talked to you.
Yeah. So what I'm getting at is if you buy a long dated option, like if you buy an option 2 years out, that's in the money, you're basically getting 6x leverage.
Oh my gosh.
No, I'm being serious. And if you use margin plus that, you're at almost 11x, 10x basically.
So like that's why I asked the question, because right now I just asked the questions because everybody's not going to want to understand options to the extent that Fahim does. Hell, a lot of the stuff he said I understand, but I have a basic knowledge of it, and I wouldn't apply this because I have a basic knowledge of what he did with the options. But for a poor man, if you're talking about $200 a month and reinvested it, and we're talking about with no contributions over $200 is 100,000 in 10 years. So somebody would have almost six figures at the age of 30, and we're talking with no contributions. Imagine $200 a month, or even $200 every other month if they did that over the contribution to 10 years. That's why I asked the questions. I'm asking for younger adults, because if somebody would have told me this when I was 19 in college and just signed a bonus in the military and showed me how to do this, what the fuck I would fucking work. No, like, you know what I'm saying? This is pertinent information for people, like for younger people, and that's why I asked those the way I asked them, because it was really not for me. Like, I can go put $10,000 down right now and it'd be nothing, but your average college student couldn't do that. But hell, I can imagine if they saw this, the smarter ones would be like, shit, all it takes is $200 with no contribution and I ain't got to touch it or forget about it. They would do that.
But again, that's using the past 10 years data. The next 10 years could be a straight bear. So I mean, I say the only downside to these
Yeah,
personally.
that's not gonna happen. That's not gonna happen. That's well, I'm not gonna say it's not gonna happen. It's extremely unlikely for that to happen. On top of the fact, between inflation and everything else, I highly doubt it's going down.
I mean, I get it, but like for me, like I say, I'm one of those people where, past performance isn't an indication of future performance. However, you can use past performance to make educated decisions about the future. Like I say, investing this long term, down for it.
We're still talking $200. So let's say we're still talking just a pure. I'm just talking a pure investor of $200. Like that. This is when people invest, and this is one of the first things I always say: do not put in money you will need later. It's disposable income. That shit you use to get your hair done. That shit you use to buy sneakers. That shit you use to buy cigarettes, weed, whatever else you do. That's what that money should be going into when you put into stocks, because you can lose it, or you will lose it if you fuck around with it.
Mm-hmm.
So that's why I tell people, let's say it was a bear market for the next 10 years where people didn't make any money. I guarantee they still wouldn't come out with just $200 with no investment. I guarantee it would still be, it may not be 89,000, but it might be like 40,000.
I agree with you. I mean, ultimately, I think when it comes down to investors, it comes down to psychology, right? And a lot of people don't have the psychology to hold up strong in a bear market.
But
Right.
you also, you're correct. But let's say you've been investing $200 a month. So
Now,
you
now, like I said, if you can, shit, you Pablo.
Hey guys, I gotta head out.
All right.
But
Hey,
fellas, I'll
D.
see you guys later.
Derek, where you going?
Man,
I'm
I got
still
bedtime, man. So-
All right,
Right.
man.
I'm saying based on the $200 a month,
All right,
or even
fellas.
just $200, you don't invest no more money in a bear market. Nobody said in a bear market you don't have to invest any money. You could just sit hold.
It would be
Because
best to invest during bear market though, bro.
What?
Dollar cost averaging in a bear market would be smarter than in a bull market.
Yeah, dollar cost averaging in the bear market is
Talking
genius.
about in the scenario that Herb talking about, you still gonna make money regardless in that type of situation, and you don't invest in money.
I mean, yeah, I definitely agree with you. But ultimately, like I said, like I was just saying, it boils down to psychology. And a lot of people, as soon as they see that, because like I say, you're seeing triple the drawdown. So if this drops 10%, you're seeing a drawdown of what, 30, 40%?
It depends on how fast it happens.
All right. A lot of people, when they see an account go down 40%, they just sell. A lot of people don't have that psychology of, okay, this is it. Like for me, I will look at the returns Fahim gave and say, okay, this is under the assumption of a 10-year return.
Yep.
I would not look at this as it's the assumption of a, 30, like this is what I'm gonna get in a year. For me, I would literally put my money into this and sit on it until 2030 and see what happens.
Yep.
Yeah, but that's what we're here for, to inform people what it is. What you're even saying now is to inform people, like, look, this is a long-term money haul. This ain't no short shit. We're talking about it.
Yeah, I definitely agree with informing the people, but it's also just making sure like you really let them know that, hey, this is only if you hold for 10 years and you're gonna, it's like, again, you just see the number of down. I put 10,000 in there and I get 1.4. It's like, yeah, but that 1.4, that account may be down 60% at some point, and you may have to sit there with some crying eyes before it comes back.
That's what I was saying. You're saying for 10 grand. Somebody doing 10 grand is somebody in our age group, or and older, who can afford to give out 10 grand, and that shit's not, it's disposable income. It's just a matter of where you sit on the tax bracket. So $200 for a college student might not be shit, and that's still worth it. You get what I'm saying? You gotta be able to leverage it and understand it from the tax bracket you're in. You have to understand who you are as a person and what you can afford. So You know what I'm saying? Like, I don't expect a 20-year-old student at an HBCU or even a PWI got 10 grand to put into the stock market and invest it. But I can expect $200 out of them and hold it and not look at it or forget about it. I don't think that's beyond expectation for somebody in college, in undergrad, I should say.
Yeah. Because for me,
that's why I asked for the lower numbers, because if somebody would have told me 10 grand at 20, if Fahim would have did this and I was 20 years old, I'm like, well, damn, I ain't got 10 grand to do, so shit, I shouldn't do it at all. But when I said the $200, I'm like, well, damn, I got $200. I got $100. It may not be much, but shit, in 10 years, that's still more money than what I would have had. And even still, after 10 years, you'll only from 20, you'll only be 30. You can leverage out half of that, put it in dividends, reinvest it into the TQQ, look at what it leverages up for the next 10 years for 40,000. And we already know what it looks like for 10,000 and see what you got. And then you got 40,000 already in dividends, paying you monthly or quarterly or however they do it. Then after those 10 years, now you can cut out half of that again, and then now you got more paying you in dividends, and to the point where you just getting paid off of dividends. Now you don't.
That's the goal, bro. Because if my math,
if we're being honest, this has always been the goal: to work,
yeah,
to not work and get paid off of dividends.
Cause I'm lazy, dude. So I'm doing as much work as possible to be as lazy as possible for as long as possible.
Yeah, I mean, for me, dividend wise, right? I just want enough dividends to cover my mortgage.
Yeah, but I'm saying
yeah.
Go ahead, my fault.
Yeah, like for me, like if I get, like for me, right? If I get an account with 100,000, and in that 100,000, I get pull out a 3% return, get 3% of dividends a year. Hey, that's 3,000. That's enough to. No, that's not. Fuck. I need 36,000. Times it up a little bit more.
36,000 for what?
Also, the fact I remember when we talked, Fahim, me and Steve, we talked about this shit. We said working for other people is for the fucking birds. So we said we got to do something out of this bitch. We started with the app. We started with a lot of different shit, and we stumbled our way into stocks. We needed goddamn money. Fahim learned it to an extent. The rest of us didn't learn. I learned all about business and branding and all that other shit. To be honest, if I decided to do anything else with a brand of business, I know within 3 years I can have that shit booming, because business is just that easy for me. I understand the marketing behind it. I understand the psychology behind it. I understand it to a whole aspect, and I understand how to do it off a small budget. I also understand when you need help at, when you don't need help at. We just learned what we needed to learn because we didn't want to work for other people. I sit in a position where I don't have to work. Fahim's really in a position where he doesn't have to work anymore.
Nah, I have to, bro. I owe the government.
You do, but you don't.
No, nah, bro. This is non-negotiable. 5 years.
No, bro. Nah. And then,
after that, though, I'm trying to have it to where as soon as I'm done with this contract, I can make the decision whether or not I want to continue.
Yeah, bro. Then you gotta get ready for it.
That was my purpose of joining the military when I was 19. Because at 39, I knew I could be retired. The overall game plan was sped up, but I'm not complaining. I am, but I'm not. I would definitely love to have my back, but
yeah. I think I got it, bro. So it is what it is. As I said, I'm just doing this to consult with this dude. You already know what my game plan is, and that's all I'm doing. I'm not doing no other weird shit.
Which is what? What's your game plan?
Oh, having at least, well, I have lots of 100 of these shares, and I'm just selling calls every week, using that premium to buy back into it. So I don't have to put any money in this portfolio anymore. My portfolio generates by itself from selling calls and puts and all that, like $600 a month. So we Gucci.
Well, I guess how much are you risking each time? Can't be. You're not risking them.
When you sell a call?
Yeah, you're not risking the whole portfolio, are you?
So when you sell a call, you can't lose money.
Got you.
So, because what happens is if your call is in the money at expiration date and the person exercises that call, all they do is take away the shares that you have. So if I'm selling out of the money calls, that means I'm making all of the money on the way up. The only problem is when you sell calls, you cap your gains. But I'm selling shit 15% out of the money.
Okay.
You know what I'm saying? Like, it's very unlikely to happen. And if it does happen, that means I made 15% in a week.
And if-
Either way,
Yeah.
you know.
You see, that's still an advanced strategy. That's why I did it all based off the $200 in stocks to see what a person would make.
I mean, with $200, I wouldn't even buy TQQQ. I would just buy a long dated call option.
But I'm saying, like, when I asked for the $200, was that an option, or were we talking about just a regular stock
That was just the TQQQ by itself, naked.
with the option?
No option, just a ETF.
See what I'm saying? Like, that's somebody who comes in here and trying to learn stocks or options or whatnot will understand what I'm saying, and then somebody who advanced will at least be able to
Well, I
grasp
mean,
and move forward.
selling covered calls is like the lowest level option that you can possibly do. You need level 3 to sell like calendar spreads and put options and all that. But that is what it is. I'm just out here chilling, bro.
You still gotta have a certain money and market cap to sell calls.
That
Gotta have a
depends.
certain call.
I can sell calls with $200, bro.
How?
Depends on
You
the price
buy-
of the contracts.
You buy a call and then you sell another call using your call as collateral. It's a poor man's covered call.
Oh yeah, I forgot about that option.
Yeah, that's what I'm saying. That's what I would do in an account that small. There's really no point in buying 1.5 share and just sitting on it.
What about if you're doing it over time though? Like you're putting in $200 a month.
Oh yeah, I mean, yeah, that also works.
But you saying there's just a quicker way of.
Yeah, I'm saying like, so when you have less money, you need to have leverage in order to keep up with inflation.
Uh-huh.
So that's the only way to really do it. Because if you look at it from a holistic perspective, if we just look at the S&P 500, if we would have just invested in that for the past 10 years, we would have seen 9% compound annual growth rate. Over time, yeah, every 10 years, every 7 years, your portfolio should double. That's not going to get us to retirement. There's not going to be Social Security for us, bro.
Yes,
You know what I'm saying? So we have to have our own retirement plan.
Because right now, just in like, my safe havens, I put in about $1,200 a month. And
Mhm.
that's just in index funds, S&P index funds. Like I say, my current ratio right now is 93% S&P 500 index funds and 7% high yield bonds. And
Yeah.
basically for every year I get older, I just decrease that ratio by 1. So next year I'll bring it down to 92% and 8% until I get to about a 73-30, and I'll just let that ride out.
Wouldn't it be easier to get a target date fund that automatically does that for you?
Nah, I like controlling it myself.
So I
See,
got
got
a question. If I decided to for the poor man's call, I buy the call, I sell the call.
Uh-huh.
Would I still be gaining money, or do I just break even?
So it depends. So let's say the price of the stock is $10, right? Let's say you buy a call with a strike price of $11 that expires 60 days out. And now let's say you sell a call against that call that expires 30 days out, but it's at $12. As long as you're not at $12 at the expiration date, you keep your call plus the amount of premium that you got by selling the call. So the cool thing about that is at 30 days, that's when you start to have theta decay really start to ramp up. So the shorter dated call starts to reduce in value or decrease in value much quicker than your longer dated call. That's why they recommend you do a calendar spread, which is the same thing. So all of these type of strategies, once I show you how to do it, it's very easy to understand. Like all of the Greek symbols and all of that, I understand exactly what each of those means. You can go into Excel, put all the values in, and estimate your gains.
Well, this week I don't have time for you to show us because I'm at the log off, and I know this recording is about to end real soon because there's a lot of data. But I'll holler at you. This is word of mouth.
Yeah,
Taking
man.
pieces, starting on the financing part here soon. You know, might have bits and pieces here and there. Just look out for it. You know, Fahim the King is really over this whole financing shit right here. He's really
Don't tell nobody that.
All right, bro.
I'm not a financial advisor, bro.
Hey, Fahim ain't about to. Fahim got a little lady to worry about.
About to get her on this shit too, low key, bro.
Well, this is word of mouth. Peace.
This nigga's going. He's about to get married, dog. I'm telling you. He's on the top dog shit. Like, oh my god.
You know you're still recording, right?
My dog is getting married, boy. Said you should be my lady.
No, I mean, dude, let's be real, dude. I don't think anybody has the financial literacy or anybody that has taught them any of this type of stuff. So it would be like terrible not to tell somebody of these type of opportunities when they exist.
Yeah, of course. How's it feel for that to be your lady?
She's your queen to be.
It
What
is.
does that even mean, bro?
Is the recording off?
No, he still got it on.
Oh, kill the recording.
What does that mean, dude?
Thank you for your support. We appreciate you tuning in weekly for our daily updates, talking relationship goals, etc., etc. Y'all know the deal. Continue to look in and like, subscribe. Make sure to tell us what you want to see in the next videos or things we should talk about. But now available on our website, Top Dog Get Fought For t-shirts. Just click on the word of mouth link in our description, click on shop, scroll down to apparel, then click on learn more. This is where you can find all our word of mouth gear. And this is word of mouth. Peace.
Mm.